Broadcasting from the city of brotherly love, Philadelphia to around the globe. You're listening to Shark Bite Biz, your exclusive place for business strategy, sales, marketing, and tech in the roaring 20s. And now, here's your host, David Strausser.
It's that time. Yes, indeed. It's time for another episode of Shark Bite Biz. Once again, I'm your host, David Strausser, and this is your place to learn how to grow a business during a global pandemic. First, I've gotta apologize for my voice. Oh man, I am such a huge football fan. I love my Philadelphia Eagles so much. I don't know if you can see it, but you can probably see my back wall right there. I don't know if you saw this past Sunday, but the Eagles actually tied. I yelled a little bit too much. I got a little bit too overexcited. And here we are a couple days later, and I still can't talk from it. So I apologize for the voice, but bear with me because that interview actually was recorded before the game happened, so my voice was fully intact. The previous episode, we discussed the personal and business finance topics with my good pal Danny Lee, and that was a milestone episode marker. I mean, that was episode 25. Now we're kicking off the next 25 with episode 26, and we're going to cover the other types of financial matters. So what does that mean? Well, the saying goes something like there's, two things that are certain in life? Death and taxes? Well, I'm not dying, so we're going to be chatting about taxes. Seriously, though, who does not love a great conversation about paying the government more of your money? Right? This topic is so confusing for so many people, especially with the current situation. And then you compound that with things like the Supreme Court's Wayfair ruling that came out maybe 2 years ago. And wowzers, okay? There's not enough Excedrin, not a sponsor, in the world to deal with the migraine that you're about to get. So today's guest gets it. He's been helping small to mid-sized businesses for many, many years, making their tax life much more simplified and digitally transformed. Can you believe it, that you can actually digitally transform and automate taxes? Crazy, huh? But it's true. So let's talk about today's guest, John Regan of Avalara. As a technology solution advocate, John has worked with some very well-known firms, including Toshiba, Infinity, and CBS. Now, with Avalara, John helps companies navigate the extremely complex world of sales tax compliance. John and Avalara help companies to get compliance done right so that negative audits can be avoided. Due to the economic downturn, audit preparedness has taken on a greater importance. In fact, every business owner should be aware of how their tax compliance obligations and risks are rapidly changing. It's time for me with this raspy voice to shut up. Let's just bring John on in here.
Business strategy.
Hey, John, welcome to Shark Bite Biz. So glad to have you here.
David, great to be here. Thanks for having me.
Oh, no problem, anytime. So obviously, I know who you are, but I assume many of our listeners out there don't know who you are. Can you do us a favor real quick? Just tell us, your background, your experience. Who is John Regan?
Oh, great, David. Thanks. And I appreciate everyone joining us today. As for me, I've worked in the business of making business better, really, over the course of my career. I was employed by Toshiba, Infinity, the car maker, CBS Interactive. The one thing that's been consistent throughout my career is I tried to help companies become more efficient, to adopt new technology. And now I work for a company called Avalara. You probably haven't heard of it, but you probably used Avalara's technology today in one way or another. We'll get into that. But Avalara has to do with sales tax compliance. It's an often overlooked process within a company, but every company is required to be compliant with sales tax. You either have
I know everybody out here loves tax.
Yeah, right. So you have me on this webcast, and I really appreciate being here. But I got to tell you, I think your last webcast or previous one was done with Jack Douglas, producer for Aerosmith, a rock and roll. And now you've got a tax guy talking to your audience. Okay. So how am I supposed to follow that up? I'm a tech geek talking.
Oh, I know. It definitely, I mean, when you have somebody that produced some of Aerosmith's biggest hits, they produced songs like Imagine, worked with John Lennon up to his passing, and all the other great stuff that Jack actually did. It's hard shoes to fill, but I'm pretty sure that you're going to bring an awesome dynamic to this interview and people will love it.
Okay, I appreciate it. We'll rock and roll the topic of tax.
Okay. Yeah. You make tax fun. So why don't you tell me? Let's start off at the top. What ends up making sales tax a big deal in the first place?
Well, here's the issue. Trying to get it right, trying to be compliant sales tax-wise in your business in the U.S. is really hard to do. And that's because of how we were founded. We're founded on states' rights. So each state, since we started, has the right to enact tax rules and rates of its own choosing. Every state, therefore, came up with something different tax-wise. And for a company, your business, for example, in the accounting department, it's really difficult to keep up with. We're not like the EU where there's only one VAT or value-added tax. I mean, if your company's selling in all 50 states and you're doing compliance manually, check out these stats. You need to keep up with over 12,000 tax jurisdictions. That's where the tax rates come from. There are 35,000 different tax rates. At any one time, 20% of those rates or rules are changed. It's a nightmare to keep up with. There's so many exemptions for products or services, millions of them. So it's really complex trying to get it all done right. That's the problem.
The Wayfair ruling actually made that a lot more complicated. Correct?
Yeah, it sure did. So your company's doing business and it's selling into other states. And those state governments want tax revenue. That's what gives them the funding to fund the schools, the programs, the buildings, the highways, everything that they need to spend money on. So prior to this Supreme Court ruling, South Dakota versus Wayfair, a company's obligation to collect and remit sales tax on their sales into a state was based on where that company had a physical presence. Like if your company had maybe headquarters in California, a warehouse in Texas, offices in New York, you only had obligation to those states. You only had people or products or buildings in those three states. Well, what happened in South Dakota versus Wayfair was South Dakota saw Wayfair come into their state. South Dakota is a relatively poor state to begin with. Not a lot of money coming into their coffers. But they saw Wayfair come into the state with a huge marketing campaign. And Wayfair was making a great deal of revenue from the people of South Dakota. But because Wayfair didn't have a physical presence in South Dakota, it didn't have to send any sales tax revenue to South Dakota. So in essence, they were getting a lot of business from South Dakota with scot-free, tax-free. So it went through the courts. South Dakota had an issue with it, and we were quite surprised at Avalara that it went all the way to the Supreme Court, and they decided in favor of South Dakota. So they came up with a whole new set of rules. That's what Wayfair is all about. It's a whole new dynamic as far as what determines where you have an obligation to.
I honestly thought that whole thing was pretty crazy. I remember the good old days. You'd buy something off Amazon or wherever, and maybe the product was the same price as what you were paying for it at Best Buy, but it was still going to be cheaper than Best Buy because you weren't paying that sales tax if you got it from Amazon up until I know California was, I guess you could say, ahead of the curve and really started forcing companies to charge taxes before the Supreme Court ruling. But I was pretty surprised that they actually enacted that nationally and made it very complicated for small businesses to be able to sell across state lines.
Yeah, when you think about the impact of the way it was on brick and mortar businesses. Now, for example, I was sitting at a happy hour one day, as I often do. But I enjoy that. But I was sitting next to a guy, and I explained what I did for a living. And we got into an interesting conversation. He ran a brick and mortar shop selling high-end photographic equipment. And there's a customer that came into his door looking at a $10,000 camera. And so the proprietor walked him through the different options available, the different makes and models. They finally narrowed it down to one. The guy came in to make a purchase. And so the proprietor of the shop started filling out the invoice, and he got to the tax line. There's about $800 worth of tax there. And the customer said, now, wait a minute. I can order the same thing online and I don't have this tax. I'm not going to spend $800 on tax when I can get it for free without tax online. Right. And so he logged into that. So that's kind of an example of the world that the brick and mortars had to deal with until this ruling. Now the playing field has been leveled, so to speak. What causes a company to have a sales tax obligation, or that's referred to as nexus, is how much business it does in that state. By business, I mean how much business. It's determined by the number of transactions and the total revenue in the past year that you've sold in the state. What's crazy is
every company, to clarify though, too, if they're doing business in a state, every company does have to be sales tax compliant in that state. The levels of what you're saying, it sounds like it varies for each state, right?
It does. Like I said, the top of our talk, we're based on states' rights. So now we have a whole new rules that came out from the Supreme Court. So every state has different, what's called economic nexus thresholds. For example, like if you're selling into Georgia, you don't have to collect and remit sales tax to Georgia until you get to $250,000 or more in sales in the prior 12 months. But in other states, it's different. In Alabama, it's like $100,000. So those thresholds vary from state to state. It takes that already burdensome compliance process that I was talking about. It makes it even more difficult to keep track of when you're crossing these thresholds. And
how do people track crossing those thresholds then?
You have to.
If you're a small seller that does business nationally, but maybe you only have 4 or 5 employees and you sell, I don't know, a niche product, let's say. Okay, That's got to be a nightmare to track manually, right?
It is. You have to keep a pretty extensive spreadsheet, and you have to track where your sales are coming in from all of your different sales channels, like your brick and mortar, your ecommerce, your point of sale, your ERP. So you have to keep track of all of them and keep them, accumulate them to see if you're going to cross any of those thresholds for a state. Or you can automate the process, and that's what Avalara helps with. And you can be warned when you're approaching an economic nexus thresholds, so you don't get in trouble by crossing it and then having to go to the state and saying, oops, I made a mistake.
So you actually warn them so that way they could stay under that threshold if they want to? That's pretty cool.
Yeah, they don't usually stay under it. They usually, when you see it coming, like Avalara presents a map of the United States with the states color-coded. So if you have an orange state, that means it's approaching red. It's sort of like a stoplight. That means that you're nearing that threshold and you need to start thinking about what you're going to do about it. So you have to, then your tax strategy comes into play. Are you going to register in that state? Or are you not? What's interesting about compliance in this country is that, yes, all companies are required to be compliant. It's a statutory requirement. Really big word, statutory requirement. Sound very, very powerful. But in reality, companies don't necessarily treat it that way because it's so difficult to be compliant, like I've been saying. So reality is interesting. Companies treat sales tax in one of 3 ways. They either fight it, or they are compliant, or they take the ostrich approach and kind of shove their head in the sand and hope they don't get audited. So some firms strive to be on the right side of the law. Others are okay with a certain amount of risk, and a few others operate at risk and they take their chances.
So if you, let me just make sure I understand this correctly. If you're going to be under a certain threshold, then you don't have to charge sales tax to that person, depending on the state.
Yeah, if you're under the threshold, that means you're not obligated to pay a certain percentage of your sales into that state to that state.
Okay. But should the company still be charging sales tax then to say, I don't know, give me one of the limits that you just said. I think it was 100,000 for one of the states.
That's the most common limit is 100,000.
Okay. So let's just say I own mom and pop store and I'm going to sell to North Dakota. Okay. I'm only going to do one sale because of the product that I sell. It's 40,000. Okay, that's it. I'm going to be under that $100,000 mark. Should I then still be charging sales tax, or is that sales tax exempt? How does that kind of work?
As long as you don't have nexus or that sales tax obligation, then you don't have to charge sales tax on that.
Okay. Now, what if I would hit that nexus and I didn't charge people sales tax for the previous. Is that something where then you're losing a percentage because you crossed the nexus?
Well,
because you have to pay it in.
What happens there is you've crossed that threshold, and so you have to decide, am I going to register in that state or not? Before you answer that question, you should ask the question, how long have I been doing this? How indebted am I into that state?
Right.
Because if you register in the state without looking at what your risk is, the word I'm looking for is your exposure.
Right.
Then you could be doing yourself a disservice, because once you've identified yourself and you've registered with the state, you lose negotiating room. The state will say, oh, okay, yeah, you did pass our threshold. And you know what? You've actually had nexus with us for one reason or another for the past 5 years, and you owe us 6 figures. And that's not a situation you want to be in. So that's one of the things you want to do in preparing a strategy for tax is to look at where your exposure is, decide what you're going to do about it. If you need a representation to represent you to the state and to tell the state, I have a company here, Avalara can provide this service. You can tell the state, I have a company that wants to register with you. They have $200,000 in exposure. How about we make a deal where they will pay $40,000 in exchange for you knowing about them and registering, and you can work that sort of deal with more power behind you before you register. So there's a whole different you can have by state.
Okay, but still, it's state by state, and there's 50 states, so it's still a lot to do regardless. So give me some examples then, besides what we've already talked about, of how all these new tax rules are really going to impact businesses.
Sure. Say a lot of businesses, because of the COVID-19 and the economic downturn, they're looking at different ways where they can get revenue. So a lot of businesses are turning to an e-commerce channel, and they're ramping that up. So and e-commerce is just exploding. It's not like the de facto way of shopping. So when you do that, you're no longer selling it out of your brick and mortar. You're selling in your 3 or 4 states. You're selling into every state. And you're starting to cross these new economic nexus thresholds. So what we see, and this number's pretty shocking if you're an accountant and you have to deal with this process, but what we see is that a company's sales tax obligations or nexus increase by 6 to 9 times when they take on an e-commerce channel. So what that means is this poor person in accounting who's dealing with this burdensome process and not getting it right now has that process has become exponentially more difficult to do, 6 to 9 times more difficult to do.
Wow.
So that creates a decision point usually for the controller or CFO, and they say, geez, we weren't doing it right to begin with, and now there's no way in the world we come up with this. So it's time to automate the process. Another example would be with B2B sellers or sellers that are selling tax exempt. A lot of time they look at the Supreme Court ruling and they say, oh, that applies to taxable sellers. Doesn't apply to me. But that's not the case. Actually, in over half the states, those economic nexus thresholds include both taxable and non-taxable sales. So what happens is that the non-taxable seller, the B2B seller, actually triggers nexus for their B2B sales, and while they wouldn't be required to collect and remit sales tax into new states, they'd be required to register in new states. So what that means is they have to provide exemption certificates and keep them on file for all these new states. There could be 25 to 30 new states that they have to register in. There's a cost there. And there's someone has to manage all that. And there's the exemption certificates for all their customers in those new states. There are going to be thousands of new exemption certificates that the company has to keep on file. Now, they expire. They can be the wrong form. There's a whole bunch of problems when you're trying to keep thousands of different legal documents like that on hand and up to date, and you're trying to do it manually. So that can be automated as well, a process that we can automate through Avalara as well. So it's not just taxable sellers, it's tax-exempt sellers that are affected by this.
So let me ask you then, what is the probability of getting audited? Is there a real risk for a typical company? I mean, if I'm in Pennsylvania. If I operate in Pennsylvania, can California demand an audit of my books and my sales if I'm not physically located there?
If you're selling into California, yeah. And that's what we're seeing a lot more of is companies or states having offices in other states. state auditors having
Right.
offices in states, that sort of thing. There's a lot more sharing of information between the states regarding taxpayers, companies.
Okay.
Bottom line, audits are just no fun. You think about it, if you're in business, you have insurance for a catastrophic event like a fire or a flood, but a catastrophic audit can bring the company to its knees. So why not automate that process and get rid of that risk? But bottom line, yeah, there's a chance of an audit.
How would they find out? Let's just say I sell very expensive jewelry. I got $25,000 Rolex watches that I sell, and I just happened to sell 5 of them in California. I shipped all of them overnight with UPS, not even with the postal service, with UPS private shipping. Can California actually detect that I had shipments going? What would be the tip off there that could possibly cause the audit?
Good question. I'm not a tax expert. I just play one on TV.
And they're in podcast interviews, right?
Yeah. So, but how they do that? I mean, there's a story about a mattress company, I think on the border of Washington and Oregon. And an auditor was sitting at a coffee shop near the border. And the auditor saw this mattress truck, the company truck delivering mattresses, crossing the bridge over the river that separated the two states. And he would always have his coffee, and every day you see this mattress truck crossing from one state to the other. And he realized that in the state they're coming from, there wasn't sales tax being applied on the product. The state they're coming to, there is. So buyers, what they did, they were selling, and they were saying, you don't have to pay sales tax. When in this situation, they really needed to. So there can be a physical way
right.
of catching it. Another example, an auditor walks into a coffee shop. I don't know why coffee shops are the big topic here. But anyway, he goes to the restroom and he notices in the back there's shelves at the end of the hallway, the cups that people drink from, still in the boxes and the bags, not being put into the workflow yet in the restaurant. As he's purchasing the coffee, about to sit down, he asks the proprietor, what are those cups for? And he says, well, some of them we provide to the employees so that they can have coffee on their break, and most of them we use in selling the coffee. And that's a gotcha right there, because if they don't record the use of those cups as what's called the use tax, then there's a gotcha. There's gotchas all over the place. The biggest gotcha.
My father had a construction company when I was growing up for probably about 30 years. And that's the one tax thing that I always remember him talking and complaining about was the use tax.
Oh, yeah.
To this day, I don't even fully know what use tax is. I probably should, right? What is use tax for people that don't know? Give us a high level.
That's a whole big topic. That's one of the most confusing areas of tax. Use tax and exemption certificates are the two biggest gotchas, so to speak, for an auditor, where an auditor will likely find errors. Use tax is a tax on the use of a product. In construction, for example, the construction company will bring in the wood materials, the metal materials, the fasteners, and all that, and keep it in a yard. And then those materials are put to use in different projects, and some of it becomes waste. So trying to keep track of the product that goes to waste or is maybe in manufacturing is used as samples for quality control reasons. That any product that's used up in the use of the business rather than on the sales side, that's where we get use tax involved. Okay. You're using a product that you're using internally rather than product that you're selling externally.
Now, one thing I wanted to talk about really quickly, too, I just had the Kajibers scared out of me. I am petrified of spiders, and my 3-year-old keeps putting little toy spiders on my desk, and I just nearly jumped out of the seat. Sorry about that. But one thing that I wanted to ask about is we've heard a couple times here about automation, and obviously this show, main focus of it is on digital transformation, automation, automating process flows, workflows, all that good stuff. Everybody out there knows I work ERP with Vision 33. Avalara is actually one of our partners, but I know everybody out there isn't using SAP Business One. So what others, you work with most solutions that are out there, I assume? And with that then too, explain to us a little bit how your how your automation actually works then too.
Sure. Avalara's been around for about 16 years. We have about 30,000 customers now and over 100 different countries across the globe. We have pre-built integrations or connectors into over 700 different ERPs, shopping carts, or point-of-sale systems. So we connect into everything from QuickBooks, Sage, you name the different ERP products, shopping carts. So that,
and I know my bosses at Vision won't be thrilled that I brought that up, but I brought it up for the Avalara point, just because that shows a huge maturity and stability within the product because of the fact that it is a global standard as far as that stuff actually goes, and that's what it connects to nearly everything.
Yeah, so that makes the implementation easier, the whole rollout easier, because it's already been built. Let me put how it works into perspective of you or me. Have you purchased anything lately? Gone into a store and purchased anything?
I purchase a lot of stuff everywhere. I purchase things every day. I am addicted to online shopping, and this quarantine has only made it worse.
Okay. So I totally know what you mean. So my point is, you probably used Avalara today or yesterday in purchasing something, and you probably didn't realize it. What Avalara does is, because we connected into so many different software sources, when you're in the shopping cart to make that purchase, and you're going through the purchasing process, and there's a moment there when you say go, where you're making the purchase, you're confirming the purchase, and the computer goes out and gets the sales tax. That's where Avalara comes to play. That information about your purchase goes up to our cloud. We're a completely cloud-based company, software as a service. So it goes up and it knocks on the door to our flagship product up in the cloud. It's called Avatax. And the software, in essence, says, hey, Avatax, I have David down here making a purchase. It's this particular product from this location. He's shipping it to this location. Validate the address for him. We want to make sure we have the right address. Avatax performs.
So you do the address validation as well. I guess that is, if you think about it, that is probably kind of important in order to confirm the tax, because I know out there, like in California, I don't know how it is in Pennsylvania. I've only been out here for a little over a year. But I know in California, you have your state tax, but then you also have local sales tax that can be tacked on to the state sales tax. And buying in this Best Buy here or that Best Buy there, if it's $1,000 product, I mean, it could be literally $20, $30 cheaper just because of that extra percent or two that municipality might add on.
Yeah, true. So that's the importance of finding exactly where this transaction is located. So once we validate that address, we know we have an accurate address. What we're actually doing is we're looking at the longitude and latitude of that purchase. So we go right down to the rooftop, because your purchase across the street in some jurisdictions in the country could be a completely different set of tax rates. So we get right down to the rooftop. So now we've pinpointed which jurisdiction applies. There's over 12,000 jurisdictions across the country. So it's important to pick which one. So now you know all of those different tax rates that you just mentioned.
Does it work internationally? Sorry, I wanted to ask that there too.
Yeah.
So if I'm selling into the UK or Europe, I believe they have VAT. I believe it's called, right? It will include the VAT into the purchases, or if I'm doing someplace in Asia that we might have to do financial reporting, it works everywhere, or is there limitations to what you do?
Different countries are different. Canada's GST VAT and Europe's VAT, and the more difficult countries to get this done is China, Brazil, adding more and more capabilities internationally. That's where our business is going. Tax has been around since the Egyptian time when they built the pyramids. They helped. So getting back to this transaction, now that we know the jurisdiction, we know the tax, we also know whether that product is taxable or not. If it's not taxable, then an exemption certificate is supposed to be on hand. And so we can validate whether there is one on hand and whether it's valid or not. So it can go down that road if it's a tax-exempt purchase. If it's a taxable purchase, then since we know the jurisdiction, and we can pump down all of the tax rates to your shopping cart. So that's how your tax gets to the shopping cart right there. So you'll never make a purchase again the same, You'll know on your receipt.
You just ruined my online binge shopping experience. Thanks, John.
You can just
So
go right to it.
yeah. So I just have two final quick questions as we start to wrap this up. This has been great so far. Very informative. As I've said, you have made tax fun, about as fun as it can be. But Avalara, they have been in the news lately, right? What's going on with them?
Yeah, we have. We went public a couple of years ago, and our market cap, I think, is like 10 million now. Last year, Forbes named our stock Avalara as the top stock for the year when I was looking at the top stocks of the decade. So we're doing really good. And there's a reason for that. The reason is due to technology and where we are right now. Software as a service or cloud computing is now the de facto way businesses are moving. Everybody's moving digital. And when you look at this process, it's such a complicated, error-prone process.
I mean, even 10 years ago, you really couldn't do what you're doing. Even if the technology existed, the states wouldn't have their systems online, because I'm sure that you're able to connect the dots in 2020 more than what you could have any other time in the past 10, 15 years.
Yeah. It's because of the adoption of digital, of cloud computing. And so what that means is that poor person in accounting no longer has to keep track of 12,000 jurisdictions and 35,000 tax rates and $700,000 exemptions for this or that. All those rates and rules are up in the cloud now. That's the power of cloud computing. And so that person in accounting now can spend their time doing something that's more beneficial to the company. That accountant is a highly trained, talented person. So why have that person work on a process that can be defined as high risk, no reward? There's no revenue that comes into the company from doing sales tax compliance manually. So why not assign that accountant to maybe look at accounts receivable, tighten it up so you can have more cash on hand? How important would that be during a pandemic, right?
Right.
Or why not have that accountant take a look and determine from a financial perspective whether it's a thumbs up or thumbs down for them to put a new product in a new market? That's a good use of an accountant's time, not trying to keep the company compliant manually. So what I'm saying is this process, it's about time. It's a process that, like payroll in the 80s, that was a similar process. Very tough to do, and if you did it wrong, you'd get in trouble. Then ADP came into the market and said, why don't you outsource it? Now you'd be hard-pressed to find a company that doesn't outsource the payroll process.
Right. I mean, you can find payroll that you can set up essentially almost from an app now, because it's been, I guess you could say, simplified because of the cloud computing, the technology, the digital transformation. And that's exactly where Avalara is. You're ahead of the curve with that. And that's why you're able to bring this power to market. Now, you just mentioned something really, really interesting that had a thought trigger in my mind. You mentioned about, the cash on hand during this global pandemic being important for companies to have. Do you think because states are cash strapped because of the global pandemic and the shutdowns, the lack of revenue, do you think that'll probably lead into more audits?
Yeah.
Because they're going to be looking for every penny they can.
That just makes sense, yeah. I mean, as business starts to recover, the states are going to want to recover as well. They're in total, they're in the biggest, they're swimming in the red like we've never seen before. By, say, this time next year, the total state deficit will be over $300 billion. So they can't operate like that continually. So they're going to make some moves. So what we're likely to see is increased taxes. We're likely to see taxes on things that didn't used to be taxed before. Like streaming services or any kind of service.
That's interesting. An article just published over the last week about, I believe it was 2 towns down in Texas that are suing Netflix and Hulu because they are claiming that they are essentially, I guess it won't be telecoms, but they're providing utility service, and therefore they must be taxed like utilities. And that is working through the state court system down in Texas, I believe, right now.
Yeah, you hear a lot more stories like that. They're taxing things that didn't used to be taxed before. So
yeah, it's crazy.
It's just inevitable. The states have to get well as we get well, so that they can continue to do the job that they're there to do for their constituents. So yeah, we're going to see, higher taxes on new things, and we're going to see more audits. We expect to see auditors knocking on more doors more often. You can no longer claim, well, that Wayfair ruling is new. I don't understand it. It's been 2 years now. The auditors aren't going to take that excuse anymore. What's interesting is there's going to be a collision here, because half of the SMBs, the small to medium-sized businesses out there, still haven't taken the ruling serious. They still haven't adopted the changes that ruling
for
calls
anybody that works. And I keep referring to California. I don't mean to pick on California. Look, I lived in Tijuana for about 15 years, worked in California, then San Diego, then LA. I've spent most of my adult life out on the West Coast in California, some shape or form. But if you do business with California, you need to get right, because the California Franchise Tax Board, that is one agency. They're harder to deal with than the IRS. You should read some of the horror stories that I'm reading on places like Forbes. About that. I just read an incredible story a week or two ago about how somebody signed a contract while they were in California that moved them out of state, but because they signed that while in California, they were actually going after that money from that person. And that's crazy. Like some of the stories that I hear, and it's just something you don't want to mess with. It's easier just to get that compliance, especially with a tool like Avalara.
Yeah, in Texas, New York, they're aggressive as well. They have that reputation. You just don't want to get them.
I think New York, I can see that. I didn't think Texas would be that aggressive. I thought they'd be lax. They are? Wow.
Any state that has a lot of commerce going on. You think about it. If California was its own nation, I think it would have like the 5th largest economy in the world.
That's what they say. I wonder how true that's going to be. I mean, you have a lot of businesses that are being catered because of taxes, regulations to places like Texas. So I wonder how long that'll hold. But even with that, it seems like there's just so many people out there that one company leaves, another one sprouts up to take its place.
Oh, yeah. It's a mecca for business. Always has been, always will be.
Yeah. So next question for you is, what steps can a company take to get their ducks in a row if they're not doing anything? What do you kind of recommend?
Sure. The first thing to do is to know your nexus. Know where you have tax obligations. Avalara can help with that, as well as if you have a SALT CPA. SALT stands for State and Local Tax Expert. You can work with either of us. You need to look into, with these new rules, do you have past compliance issues? And if you do, you need to address them up front. For example, if you want to look to see where you have exposure, get an exposure analysis done. Again, a SALT CPA can help with that, or Avalara. And then if you do, like I was saying, have exposure, you might want to consider a voluntary disclosure. And do that maybe before you register in new states. Decide which states you want to register in. You have to be strategic.
And again, you guys at Avalara, you have professionals that will help you with that, help the companies with that. You'll hold their hand. You have people, or no?
Yeah, we can't give tax advice, but we can kind of lay down what the scenery looks like, and then the company make a decision. And then, given all that's going on and the fact that this is an inevitable solution, automating this process is inevitable. You have to think, well, why am I not on that bandwagon? Why, within 4 years, there are going to be as many companies automating sales tax compliance as currently outsourced payroll. So that's how fast it's growing. So you got to look at tax automation as a required capability in your business. And what happens if you don't do that? Well, it's not pretty. Down the line, if you continually do this manually and you're not keeping up with the changes, the rules, the rates, the exemptions, what you end up with is an error-plagued, like, black hole of tribal knowledge. What happens when the next pandemic comes? What happens when your ERP system needs to change? What happens when a key person who holds that tribal knowledge leaves? It's not a good situation. So without automating this, your audit risk is going to grow for every state you're selling into.
Right.
And now that we are selling through all these different channels, e-commerce, you've got your Amazon, the whole marketplace scene, point of sale. You need to be able to track all of your sales through all those different channels to see where you're triggering nexus. And that's, unless you have an automated way to do that, it's very difficult to do manually.
That's where I think definitely an ERP solution like SAP Business One fits in nicely with a solution with like Avalara, where you're able to see really all aspects of your business from A to Z. No, this is great. This has been wonderful, John. How do people get in touch with you?
I'm sure you should share my contact information. But John, John.Regan, Regan, at Avalara.com.
You're going to be bombarded with interview requests after this hits. You're the most enthusiastic sales tax guy on this earth. I swear, John.
At least the most enthusiastic one you see.
yeah, exactly. Do you have any final words of advice out there?
Yeah. My role is an alliance manager, so I'm responsible for the partnership between Avalara and your company, Vision 33. And like I said, I'm not technically a sales tax expert, but we have a lot of those. And what I would do is get you in touch with the appropriate compliance consultant and figure out where you are, figure out different options that you can look at, and then help you to make the right decision for your company as it grows.
Yeah, no, that sounds great. Once again, John, hey, thank you so much. This has been extremely informative. I hope I didn't throw too many curveball questions to you. And definitely, we look forward to having you back post-pandemic to kind of talk about how things change. Because I think with states struggling for cash flow, you're going to see a lot more things being taxed, like you said, a lot higher tax rates. And I'd love to kind of hear how things have changed between then and now.
That sounds good. Looking forward to it. Thanks, David. I appreciate being here.
Oh, no problem. See you, John.
Okay, thanks. Bye-bye.
Wow. John is awesome. Seriously, I mean, he really makes talking about tax interesting, right? That was probably the most fun conversation I've probably have ever had about tax in my life. And a funny story about John. And he'll probably hate me for sharing this, and I do this for everybody. You know, when I'm scheduling somebody for an interview with Shark Bite Biz, what I do is I say, hey, do me a favor, give me some talking points so that way we can make sure that we hit on the key topics, for the show. I mean, when bringing experts on here, and there's certain areas that we want them to talk about so that way you all can learn from it. And I tell everybody, give me those talking points, but remember, it's going to be an unstructured, but yet structured conversation. We want guiding points to make sure we get that important info out. But what it's really like is that it's an unstructured, flowing conversation. We're ultimately going to go where the conversation takes us. So John, gotta love him. He essentially gave me an equivalent to like a PowerPoint. Huge document with not only every question littered out, but essentially every single answer in detail. And I love John. And really, if you need help with taxes, that's the type of person you want working with your taxes because they think everything out. They're extremely detailed and, very knowledgeable. So needless to say, you've all just watched the interview. We had a very unstructured conversation and he was not reading from the manuscript. But sorry, John, I had to tell that. It made me chuckle. I love it, man. You're amazing. Thanks for coming on. Now, on a serious note, okay? There was a lot of info packed into that episode. So I wanted to bring John on in here because I knew that a lot of companies transitioned to e-commerce that weren't doing so 6 months ago. That Wayfair ruling is insane and causing many headaches for a ton of companies out there. I know. I'm back in California, being an ex-SoCaler myself. And I did that a little bit this episode, but they do have a notorious franchise tax board that really pushes the limits. And you don't want to be on the wrong side of them. Okay, that's just a flat out truth fact. Fact check that. You do not want to be on the wrong side of them. And that's why I thought, from a host of a business podcast, that bringing somebody like John on can really help you kind of understand and figure a lot of that stuff out, so that you can see if you have any liability in a state. And then in addition to that, what you could do to kind of digitally transform that liability so that you can make it as automated as possible. Me working in ERP, that's what I do. John with digital tax, essentially, that's what he does. Reach out to John. His info, being a contact, reach out to me. If you need help digitally transforming whatever it is, reach out to me myself, david@sharkbitebiz.com, and I will make sure you get led into the right direction. Ultimately, though, with John and the whole tax situation, the end goal is two things. One, pay the least amount of tax as possible. Number two, avoid an audit. And it's really pretty crazy how in one state you can owe nothing and you sell 5 million in goods, but in another state you owe hundreds of thousands for selling less. As always, I hope that it gave you some insight into the tax world and how you can possibly better handle it going forward. So tell us, what's your experience been because of the Wayfair ruling? Are you new to e-commerce? Has that affected you? If it has, how have you handled it? If you're watching on YouTube, leave a comment down below. Let's discuss this. This is a very mundane, but also very interesting topic to talk about. Let's get some ideas flowing. Remember, as always, if you love this video, please make sure you subscribe to the channel. We're fully dedicated in just getting out this top-notch quality content to help as many people as possible be able to grow professionally, be able to grow personally, and also be able to achieve business growth. And if you really want to help the channel, remember, check our Teespring store out. You can see the link down in the description. Doesn't matter where you're watching. If you're on YouTube, Spotify, Google Podcast, iHeartRadio, Amazon Music, iTunes, you'll see the link. It's in bright red lettering, or it should be, and it's going to give you the link to our merch store. Got some really awesome stuff, just like this beautiful Shark Bite Biz coffee mug. We got face masks. I have face masks that'll be coming this week. I'll pop those out for videos next week. But you can support the channel. Everything you do helps us with covering our basic costs. It helps us produce a better show, get better content, and make the show the best we possibly can. So I'm David Strausser. This is Shark Bite Biz, and we'll see you next episode.
Thank you for listening to Shark Bite Biz. We hope you got some insightful info from this podcast. Be sure to subscribe to us through your favorite podcast app and visit us on the web at www.sharkbitebiz.com. How has business changed for you in the 20s? Email us at podcast@sharkbitebiz.com so you can join us and share your story.